Well, good afternoon, everybody. Welcome to this webinar, the PPP forgiveness update for you. I know we have a full house in the Zoom room. We had, again, limited number of seats there. Those are full. For those of you who are tuning in on either Facebook or our YouTube channel, welcome. Glad to have you guys here. A couple of things as we get going. We've got a lot of material again to cover in this session. Again, the number of phone calls and the questions that were coming in prior to this thing basically made it apparent that we needed to walk through this this process one more time, give a few more updates as far as what's going on with the PPP forgiveness process. We're now in that period of time where we do need to start getting those applications in. The way this is going to work real quick, if any of you were in our last session that we did back in June, we said go ahead and put in questions in on the chat box. We did that, and we had questions coming in literally at a rate of about 4 questions per minute. There is no way we can actually take that many questions. And so as a result, what we're doing is I asked you if you had questions, go ahead and submit those in advance. Several of you had questions coming in, and there's a boatload of questions around, again, filling out those applications and how do we do that properly, how do we interpret the data. So we're going to run through some of that as well. I built all of your questions, or as many as I could, into the program. I actually responded back to a couple of you guys individually. So because your situation was a little bit more unique. So again, if you have questions, again, if you put them in on the chat, I'm not going to address those as I go through the material because I may be answering them coming up. At the end, if we've got a little bit of time, I may be able to review those. And if I can fit a few of those in, I absolutely will. For those of you on the live streams on Facebook or on YouTube, unfortunately there we can't view those chats at this point in time. If you've got them, you can put them in, and I will respond back to you after the session is done. So with that, let's dig right in. I'm not going to waste any more time than that. The one thing that we know without a question of a doubt, the only thing that's constant in this entire program is change. Because we're always seeing change taking place. And so again, just trying to continue to bring a little bit more clarity to some of the stuff that continues to swirl out there. And also to give you a little bit more information, last week, things changed. They issued a simplified forgiveness application. I'll give you a little bit of detail on that. It won't fit for all of you. So I'm going to give you the same disclaimer that I gave in the last couple of sessions that I did. Again, who am I? Who am I not? Again, not a banker, not a lawyer, not an accountant, not a government employee. I'm a business owner just like you with really the same questions, the same problems, the same issues that you're running into. And so just been spending a lot of time digging into this piece of the puzzle and want to just share as much as we can to help you walk through this process as quickly and easily as you can. Again, my name is Bill Kennard here with Grandy and Associates, and as we go through this, again, if there's anything that, say, I don't cover quick enough, jot it down, shoot me an email. We'll give you our contact information. We'll put that up on the screen a little bit later. Feel free to send me a note to that regard, and we'll take care of those afterwards. So, with regard to the protection program and this entire forgiveness process, there's increasingly more questions that keep coming up. And one of the things that I have to review again, because this keeps coming up in my conversations, remember that PPP loan is just that. It's a loan. The forgiveness for it is not automatic. You have to do your part to get that loan forgiven. It was set up that way for a reason. Again, you have to apply for forgiveness. In order to get forgiveness, you actually have to do something on your part. And so if you fail to do that, then it's a loan, right? And you're going to have to pay it with interest as you move forward. Moving forward from here. So a couple of different things. As I go through there, I'm going to reference several times this website, right? So grandyassociates.com/untangle is the page where it's kind of the repository for everything that we have regarding the PPP program. We continue to update it, put more resources out there. In fact, we've got some new things out there as of yesterday. And so, again, I'll refer to that page, grandyassociates.com/untangle, several times as we go through the session here today with resources that I'm referring to in here. Now, one of the questions that came in to me was, again, if you remember early on, right, it seems like eons ago, right, when we filed for these PPP loans, one of the things that you had to agree to was that current economic uncertainty makes this loan request necessary to support ongoing operations of the applicant. And there were two questions that came up there, right? The first one was, well, who defines uncertainty? So that was one of the questions. The other one, and you will remember some questions swirling around this thing, where companies in the first round of funding that came through, we're talking some of the very large chain restaurants and that came in and swooped up and got $10 million worth of funds, and they consumed a lot of that stuff. And there was a whole bunch of basically arguing back and forth on that point and basically saying that, okay, they were just going to audit everybody who got a PPP loan. Well, again, back in June, they did clarify that point. So again, for those who are still wondering on that one, to clarify that point, they did clarify this point, saying basically that any borrower that received PPP funds with an original balance less than $2 million would be deemed to have made the required certification concerning the necessity of the loan request in good faith. That's word for word out of their clarification. So bottom line is, if your loan amount was less than $2 million, you weren't going to be audited, right? Unless you gave them serious reason to do so, right? You've heard some of these stories in the news where people got their PPP funds and they went out and bought a real fancy car and bought a boat, and that's kind of a red flag, right? That's not the use of these funds. And so those they are going to follow up on. If you're over $2 million, you are going to be audited as they go through the forgiveness process. The other question, there were a lot of questions regarding that $150,000 threshold, that lower limit that's been thrown around the last month and a half or so. And again, the proposal basically was put in place and is being pushed very hard by the banking industry, that basically said any PPP loans of $150,000 or less would just flat out be converted to a grant. Odds are you might have to just sign a closing document, and then that was it. There was no forgiveness applications. None of that stuff was there. Again, the banking industry was pushing really, really hard because that $150,000 threshold accounted for 86% of the PPP loans that were granted. It accounted for I believe it was 26% of the total funds, but it was 86% of the actual loans. And so as a result, that would save the entire banking industry just millions of dollars in labor having to process all these. Now, that process is stuck in the whole stimulus bill that's stuck in Congress, right? We'll just leave it there. And so, as a result, again, supposedly it's in there. And for a lot of lenders, what was happening is they were accepting applications for forgiveness, but they weren't doing anything with them. They'd submit them to the SBA, but the SBA was not processing any of the loans, quite frankly, because if this went through, they wouldn't have to process them. Well, a week and a half ago, when the president said, I'm done negotiating, at that point, then it became evident that that wasn't going to happen, and the next day, the SBA started processing forgiveness applications. So that is working its way through. Again, supposedly it's there. I would not count on that happening, obviously, before the election at this point in time. I am aware of some banks, some lenders are not accepting applications at this point yet, still thinking that might take place. So again, just be in touch with your lender. They're the ones who are kind of driving that. But at this point in time, that is not in place. The majority of the questions that came in had to do with the application, the application itself. Now, as we deal with this, there's a couple of different things that came up. Number one, one of the questions is, what's the deadline? When do I have to apply for forgiveness by? Specifically, there is no deadline for applying. That's the first element to keep in mind. There isn't a deadline there. If you don't apply within 10 months of the completion of your covered period, right? So if you're working on the 24-week covered period, 24 weeks after you got your funds, if you haven't, that's the completion of the period. If you haven't applied within 10 months, then you're going to have to start making monthly payments back on that particular loan with interest. Okay, doesn't mean you can't still apply. You'll still be able to apply at that point in time. It's just that's the deadline at 10 minutes. Your payments are deferred for that period of time. If you do apply within 10 months, once you've applied, then no payments at that point are going to be due until the SBA notifies you of your forgiven amount or confirms that forgiven amount. Right? So if they say that it's all forgiven, well, then you don't have to worry about anything. If they only forgive a portion of it, well, then that's where things start to kick in. Right? So again, if it's fully forgiven, there's no payments, no interest, nothing that's due. But that does come up with the question about interest. So remember, by the terms of this agreement, it started accruing interest the day that you received the funds from the initiation of the loan. Now, if the entire amount is forgiven, there's nothing due. Okay, even the interest will be forgiven. If only a portion of it is forgiven, then interest will still be due on the amount that was not forgiven, going all the way back to the day that you received the funds. Right, so that piece of that element is still in there. Be aware of that piece. And again, it's at a 1% interest rate, so it's not a terribly high rate. The other question that came in, and there were a lot of questions about this one, is are the funds taxable? Now again, if you remember, when this program was originally kicked off and announced, there was a big deal was made about the fact that the funds would not be taxable. Right? And that's the way it originally was laid out. Well, then the SBA came through, the IRS rather, came through and said, okay, they're not taxable, but any of the expenses that you pay are not deductible either. Now, if you think about it, right, okay, if the funds aren't taxable as revenue coming in, but I can't deduct the expenses, it has the exact same net effect as if the funds are taxable. And so that's not the intent of the program. And so in that same bill, right, that's stuck in Congress, is the clarification of this point that these would not, that the expenses would be deductible, the funds are not taxable. That's not there yet. And that's creating some challenges for you as a business owner from the standpoint of, okay, if I can't take the deduction, now it might put me into a different tax bracket, and how is that going to ultimately impact me? And again, you talk to any accountant, and they're scratching their head at this point in time because how do we move forward and plan for the end of the year? Because you can be moving in one direction, assuming that it's not deductible, not taxable, and all of a sudden they're going to come in and say, yes, it is deductible, and now it changes all the tax planning that you've done. So that's one that you have to stay in touch with your accountant on because it's going to change, or it very well may change. So from here, let's jump into the application itself. Now again, if you remember early on, the application process was 11 pages. Right, and again, leave it to the government to come up with an 11-page forgiveness application that only took 2 pages to actually get the loan. Right, now, if you actually looked through and read through it, in June they came up with a simpler version of it. Well, all they did is they took all the instructions out of it. The actual application was exactly the same. And so with the applications, here is a change as of last week. So we've got the full application, Form 3508. That is the full 5-page application, and that will work for any company. In June, and really, again, the 5-page application, all they did is eliminated all the instructions. It's the exact same application as the original one. Then in June, they came out with with the Flexibility Act, they came out with a 3508EZ, which was an easy application form. They now took that the 5 pages down to 2 pages. It was much simpler. Last week, on October 8th, they came out with a third option, which is Form 3508S. It's a simplified application. Now, there's some limitations on this one. This will only apply to those companies whose PPP loan amount was $50,000 or less. Right? But that will certainly apply to some of you. Now, on all 3 of these, the last page is purely demographics, and it's totally optional. You do not have to fill it out. You don't have to include that information. But that is that last page on every application. So what I'm going to do is I'm going to start out going through the full application. And even though it doesn't really apply to all of you, the reason I'm going to do this is because in many cases, all the stuff that we're going to define going through this one will apply to the other ones. And so it helps us to kind of explain and answer a lot of those questions that came into me as we are leading up to this individual program. So with this one, Basically, again, so this is the 3508, the full application. You have to complete pages 1 through 4. Now, any sound, reasonable human being would basically start at page 1 and you work your way through. That will not work with this application. The way that you fill this application is you start out on the very last page and work your way to the front, because the very front page is asking for information that you filled out on the tables further in. So let me start that way. We're going to start out on page 4 from the back, and I'll walk my way forward through it. So again, we're going to start out with basically Worksheet A, tables 1 and 2. And so this is that last page. What I'm going to do is I'm going to start and break down the individual sections, because then as we're going through it, we can answer some more of those questions. So I'm going to start with the top section first. This is table 1 on page 4. Now, as we go through this section of the application is for employees making less than $100,000 annually. And so what we're going to do is we're going to fill it out. I'll move through this fairly quickly, but who's the individual employee's name. You're going to give each employee an identifier number. That's typically going to be the last 4 digits of their social security number. You're going to get what was their cash compensation during this covered period. Now, again, if you remember, the covered period could be you could work, if you got your loan before June 5th, you could still use the original 8-week time period. Let me back up. If you got your loan before June 5th, you could use either the 8-week or the 24-week. You had your choice. If you got your funds June 5th or later, then you're on a 24-week plan. Now, again, so what was the total cash compensation that was given to the employees during the covered period? Now, the question that does come up with that one is, and it came up is, do you use the gross pay or the net pay for cash compensation? Well, remember, whatever the employee pays for taxes and anything else that they're doing, that's their business. Gross pay is what you're going to use. And so this cash compensation consists of their gross salary, gross wages, gross tips, commissions, paid leave for everything other than the FFCRA, that Families First Coronavirus Response Act. So if somebody had to stay home because of the coronavirus, there's a separate program that you're already dealing with if you had somebody who fell under that program. But under the Standard Family Leave Act, that would qualify under this one. Separation pay. So if you had to let somebody go, or you did let somebody go and you gave them some kind of separation pay or severance package, that would fall under this area. So that's your gross pay. We did, again, have some companies ask again, well, what about if during that period when it was just getting started, we actually paid some of our employees more money to come into work because we had others who didn't want to come in? Can I include those bonuses or that hazard pay or the essential worker pay or whatever you called it, right? Can I include that in this amount? And the answer is absolutely yes. That does qualify, and you can use that as well. So we're going to go ahead and put that entire cash amount in here. Right, so that will kick in. And again, this is just the wages piece of the puzzle, right? It's not retirement, it's not insurance, it's not any of the other stuff. It's just the wage portion of it. Then we come to the column, the average FTE. And out of all the areas of this application, the full-time equivalency throughout this entire program has been there's been more questions around this than anything else. And so really that full-time equivalency, there's 2 different ways that you can calculate full-time equivalency. And the frustrating part is they didn't tell us this until after many of us had our loans already. But the standard calculation is this. It's using average full-time equivalency. In other words, you take the average hours worked per week for the employee throughout that entire covered period, divided by 40 hours per week and rounded to the nearest 1/10, right? So, and the maximum is going to be 1. Right, so in other words, if I've got a full-time employee, right, they're 1 full-time equivalent. It doesn't matter if they're overtime, they're still 1. Right? You can't have this guy is 1.2 employees. You can't have that, right? Maximum of 1. For anybody less than 40 hours a week, you'll simply take their average hours. So throughout that, that entire time period, they worked an average of 35 hours a week, divided by 40, comes up with 0.9. That is 0.9 full-time equivalent employees. That's the standard method, and you would do that with each of your individual employees going through. The second method that you can use for calculating full-time equivalency is the simplified method. And the simplified method basically says, look, if they work 40 hours a week, that's 1. If they work anything less than 40 hours a week, that's 0.5. Now, this can work to your advantage in some cases, because if I had somebody before that was working 30 hours a week, they were considered 0.5. And now today they're working 10 hours a week. Well, that's considered 0.5, right? So that can work to your advantage on that piece. It's your choice as to which method you use. You calculate it both ways if you want and use the one that most benefits you. You have the option to choose one or the other without penalty. The other question that came in, or one of them that came in, is what if I acquired another company during this time frame? Does that affect my full-time equivalency? Well, and the answer really is no. If anything, it helps it, right? Because quite frankly, what happened is, and we dealt with a few companies who acquired another during the last 6-7 months here. Well, at that point in time, I had 5 employees before, full-time equivalent, and today I have 10. My headcount actually went up, so it absolutely does not hurt you. It is still a cost of running, so you'd include their payroll in your numbers and everything at that point in time. Your company increased in size. Right, so we're going to put the full-time equivalency, right, based on either the standard or the simplified method, and then the last column is the salary hourly wage reduction. How much did you reduce their wages during that time frame? Now, we're not talking about gross paycheck wages, right? What we're looking at here is really their hourly rate or their annual rate. Did we reduce those numbers at all? Now, again, first off, you're really only going to complete this if you reduce their wage amount by more than 25%. And that's compared to your covered period compared to January 1st through March 31st. If you're paying them the same dollar per hour rate or the same annual salary amount, then you didn't change it at all. And if wages were not reduced by more than 25% per hour or per year for salary, then you just flat out enter 0 here, right? Because that was the requirement, is you didn't reduce the wages by more than 25%. As long as you didn't go farther than that, you have 0 impact there. Now, there is on page 4, the bottom half of that page gives you a worksheet. If you're not sure what's there, you can fill out that worksheet, right? And that basically comes up with a quotient, right, which you'll have to apply to find out, that you reduce their wages is going to penalize you in terms of how much gets forgiven. This will help step you through that piece of the puzzle. We also have another resource for you that I'll share with you in a little bit that will make this process much, much, much easier, right? And so we've got that for you here in just a little bit. So again, we're going to enter that one in. Next thing you're going to do is just tally up these 3 columns, right? And so you can see, I'm sorry, I missed one. We've got our full-time equivalency exceptions. So if you had employees that you did reduce a head count, but there was a valid exception, I'm going to list that one in here. And so the question then comes up, what is a valid exception? Well, valid exceptions, and again, in June, they changed this. It gave us a little bit more flexibility on this thing. And it's this. If you laid people off and you tried to hire them back and they didn't want to come back, right? You made a good faith written offer to rehire them and they didn't want to come back. At that point, that's a valid exception. You can't find a similarly qualified replacement, right? So somebody didn't want to come back and you can't find anybody to replace it. That's a valid, reason. Employees that were fired for cause, or employees that voluntarily resigned or requested and received a reduction in hours. Dealt with one company last week. Their full-time equivalency was down by 2 people. One left and didn't want to come back. Right? In fact, they both left and didn't want to come back, and even in this time frame, one joined the police force, and the second one started their own business. Right? All you need is to be able to show that, hey, I tried to bring these people back, or they requested it in writing and I granted it. That's all we need, right? So an email with one sentence saying, nope, not coming back, not interested, whatever. That's fine, right? But again, if it was all verbal, you're going to want to get something in writing on that one showing that you offered that to make that happen. That's what you're going to need to justify that down the road. Again, list only positions that were not filled by a new employee. So let's say you let somebody go, right? Let them go for cause, and you hired somebody else to replace them. Right? So that's not a full-time equivalent. You replace that position with somebody else, right? So list those as full-time equivalents, and then you're going to go ahead and tally up those columns, right? So in full-time equivalency, it's not only the employees, but the exceptions as well. And from this point forward, the rest of the detail on this sheet doesn't matter anymore. Right now, you're just simply dealing with boxes 1, 2, and 3. That's all you're going to, and it's going to refer on later sheets too, box 1, box 2, box 3. If there's not enough room on this sheet and you're using the paper application, go ahead and put it in, just add another spreadsheet to it. The spreadsheet I'll share with you here in a second can do that for you. If you're using the online portals, even if you're dealing with a bank that has an online portal, again, this all applies because, in fact, there's some places on the portal, they're going to go back and say, give me your total, your average full-time equivalency, right? That's the number you're looking for at that point. Now, again, out on that spreadsheet, the Untangle page, we've got a calculator out there, right? So it's a loan forgiveness calculator spreadsheet. There's two of them. There's one for an 8-week version and one for a 24-week version, depending on what time period you're working off of. These will walk you all the way through that process. So again, here's where I list my individual employees, their wages, right, their equivalency. It will calculate if there's any penalties for that particular employee as you go through it. It makes the process much, much simpler. This spreadsheet was actually generated by an SBA-approved lender, and they've given us permission to share it with all of you as well. The next section, that was Table 1. Table 2 is going to go quicker because we covered a lot of the stuff. Table 2 is for employees that are making $100,000 or more. Now, key point here. For both Table 1 and Table 2, these are employees. This is not the owner of the company, even if the owner is taking a wage and is an employee. Right? These are just for people other than the employees. So those individuals making more than $100,000 per year, kind of the same information. Who's the individual? Give them an identifier. Right? What's their cash compensation? Now, for employees making more than $100,000 a year, again, if you're working on the 8-week time period, this will be a maximum of $15,384. If you're working on the 24-week period, the maximum is $46,154. And again, that's just simply taking $100,000 and breaking it down to those individual periods. That will equal out to $100,000 a year annual. And then last, what was your full-time equivalency on this employee? Again, if they're a salaried employee, they're still salaried now and making it, you're in good shape. You go ahead and fill those couple of items in. Again, tally up those last two columns. So there you had boxes 1, 2, and 3 on Table 1. Now we have box 4, box 5. Later on, it's going to come and ask for information from these two areas. The last section that's on here, basically on the bottom of page 4, just gives you a worksheet to work through that full-time equivalency, the safe harbor reductions, those things that were valid employees. So if your head count is lower, that can help you on that part of it. Again, the spreadsheet does all of this stuff as well, and it makes it, quite frankly, much easier in my opinion. Again, it's simply going to walk you through, you fill this thing out, and it will come up with ultimately some values that you're going to look at later. Again, what is a valid reduction in headcount under the program? So again, in that loan forgiveness calculator, when you go in there, you'll find several tabs at the bottom. Right? One of the tabs was the employee one we looked at a couple of minutes ago. Another one is actually figuring out full-time equivalencies. And so it lets you see both the detailed standard method as well as the simplified method. And ultimately, it's going to give you an FTE quotient. And that's what's going to be used ultimately on page 1 here in a little bit to determine if there's a penalty for that. So that's page, page 4 in there all the way through. Right, so just a couple of items that I do see here, and I'm not going to be able to hit all of these as I go through it, but I see Doug is asking if employees take furlough voluntarily and applied for workers' comp, is that valid or no need for other communications? Basically, that's valid, right? They took it voluntarily, they asked for it, so hopefully they've given it to you in writing. If not, just ask them to get an email for that. That's all you need to qualify. That absolutely would cover it. Is cash compensation from 2019 or during the PPP period? Again, that will be the cash compensation is for 2020 during the covered period. How much did you pay them this year? And then also, how did I calculate the 8 weeks versus 24 weeks? Again, early on, if you got your funds, the original program said you had 8 weeks to use the funds up. Right? The amount of funds that you received came from basically looking at 10 weeks worth of last year's payroll. And then you had 8 weeks to use those funds up for payroll and mortgage interest and utilities and some of those other things. Well, then in June, they basically came out with the Flexibility Act, and what they did is basically said, okay, instead of, you're not limited to 8 weeks, you can stay and work under the 8-week program if you want, but there were so many companies who couldn't get employees back, were struggling, things like that. They extended that out. You now had out to 24 weeks that you had to use those funds up. Same dollar amount of funds, you just had longer to use them. And so as a business owner, it's your choice. If you received your funds before June 5th, you can choose, do I want to work on the 8-week schedule or go longer, right? Many companies still had money left after 8 weeks, and so if I can go out to 24 weeks, it extended out my cash flow a little bit longer. So that's your choice. If you got questions on that, Mary Lou, don't be afraid to reach out to me afterwards. So with that, let's go to page 3, Schedule A on that full application. So again, really 3 different sections. I'll walk through this one. I'm going to start out at the very top of it. Now, there's 3 areas on here. We're just simply pulling information from the worksheet we just finished. Right? So we're going to start out at the top, line 1. Go out to worksheet 1, table 1, bring back box 1. Fill it in. All you're doing is transferring information. Line 2, bring back box 2. Fill it in. Line 3, go get box 3. Fill it in. Right? So there's no calculations there whatsoever. We're just pulling information from worksheet 1 over to this sheet. If we scroll down a little bit, we see the next section is line 4. Go out and get box 4 from table 2. Fill that one in. Line 5, go get box 5 from table 2. Fill that one in. So those are pretty easy. Right? You've already done the work for those on the worksheets. The next item. These are the non-cash payroll costs during the covered period. Non-cash being things like, first off, line 6 is health insurance for employees. Now, again, as a reminder, this question came up a couple of different times for if we had health insurance issues. It's only group health insurance for that you're providing to your team. If as the owner of the company is paying for a health insurance plan for you, but it's not offered to anybody else, that's not qualified. That's not a group plan. It has to be a group plan, and it's only the employer portion of those funds, not the employee portion. Right? And that's going to go, that total is going to go in here on line 6. Line 7 is the employee retirement plan. So what funds have you contributed to employee retirement plans? And there are some formulas on this one where, in effect, they're not going to allow you to just take a whole bunch of funds and give it to yourself for retirement. As the owner, you're limited to the amount of retirement funds that can be contributed. It's basically 20.8% roughly of the retirement funds that you had in 2019. Right? So they're saying, we're not going to let you just use up funds by chunking it in your retirement account. So that's line 7. Line 8 is basically the employer's state and local taxes. Keep that one in mind. State and local only withholding. Right? It's not federal withholding. Right? Don't include in there the federal withholding, the FICA, the Social Security, the Medicare. None of that is qualified. Right? It's only the state and local taxes that the employer had to pay, not the employee portion, just the employer portion needs to go. And quite frankly, state, that's fairly low, and most around the country don't have local. There's certainly a lot who do, but they're fairly low. And then line 9. Right, so we got all the employee wages covered above. We have non-payroll expenses here. Line 9 deals with the owner. Okay, so when we deal with this one, this is going to be the total amount paid to the owner of the company. Now, there's a couple of guidelines in here, right? And if you look at it, first off, this number is not to be included on table 1 or on table 2 of page 4. Right? You can't double dip on there. Second, is they're going to limit you as the owner to a maximum amount of $15,385 if you're working under the 8-week period, or $20,833 if you're working under the 24-week period. Right? Just because they stretch that out, they're not going to let you, again, pay you a whole bunch more money. You are limited as the owner to a maximum of $20,833, which is basically 10 weeks of pay. And again, if you remember, to get the application, it was based off of 10 weeks worth of 2019 wages. That's the reason why they're limiting. Basically, they're preventing you from just taking a whole bunch of money and not passing it on to part of your team and calling it wages. So it's one or the other. And here's the caveat, right? So they're going to limit you to these levels, depending on the program you're at, or 20.833% of your 2019 income, whichever is lower. Right? So basically, and if you look at it, $20,833 is basically 20.833% of $100,000 a year. What they're saying is, again, if you only paid yourself $65,000 last year, you can't claim that you're going to make $100,000 this year simply because of the program. They're going to limit you to what you made last year at that point. So be aware of that caveat that's there. It's not just a flat dollar amount. They will limit it to that 20.833% of what you made last year. And actually, the formulas, when you look at it, it's actually 2.5 divided by 12 of last year. Well, that comes out to 20.833%. That's there. If you have more than one company owner, and they consider if you own 2% of the company or more as an owner, then you need to list that detail for each person, attach a separate sheet with the detail for those individuals. And then the last section of this page is going to be basically your total payroll cost. So line 10 is simply tallying things up, right? We're going to add up lines 1, 4, 6, 7, 8, and 9 from above, right? What's your total payroll costs? Put those in. And then we come down here, which is, again, dealing with the full-time equivalency of employees, right? And so basically at that point, we're going to look at a couple of different things, right? So again, this gets into that safe harbor a little bit. What's a valid reduction? And so if you look at it, if you satisfy any one of these three criteria, you can just simply enter in, right, check the appropriate box and skip right down and put 1 in line 13, right? And what the criteria here is number 1, you've not reduced the number of employees or their average paid hours, right? So we maintain payroll. Number 2, and again, it's any one of these. It's not all 3 of them. Right? If you were unable to operate between February 15th and the end of your covered period, right, due to things that were going on with COVID, right? So in some cases, a lot of businesses were just flat out shut down. If that's the case, check the box and put 1 down below. Or third, if you satisfy the full-time equivalency safe harbor that we talked about on page 4. If any of those apply, you can just simply go down to the bottom, put in a 1, and you're good to go. If not, then that's where you need to go in and okay, what was your average full-time equivalency during the reference period, right? So that was either last year or this year, right? And your reference periods are going to be February 15th through June 30th of last year, January 1st through February 29th of this year, or if your company is seasonal, then again, you can pick any 12-week period between May 1st and September 15th of last year. And again, that's the reference period. So what are we comparing these individuals to? What was their typical work week looking like before COVID versus what was it like under your period? So we're going to, what was the average before? What's the average now? You're going to simply divide one by the other, and that gives you your quotient. Again, your spreadsheet that I talked about earlier, that's available on the sheet, will take care of all that information as well. So that brings us down to the end of page 2. Let me just take a real quick peek here. And again, I'm not going to be able to cover all of these. So Tanya, not quite sure what you're asking. Is that from the actual date the money was put into the bank? The start of your covered period is the day that the money was put into the bank. That is the start of your covered period. So that's when the clock starts ticking from that point. So hopefully I've answered that one. So then we come back in this full application all the way up to page number 1. Right now at this point, you've done the majority of the work. Right, so we'll start right at the top and kind of work our way down on this thing. The whole first top block is your company information. All right, so you're going to fill in that information that applies. Underneath that, what's your SBA PPP loan number? Now, this is not your loan number from your local bank. When they submitted and got approved by the SBA issued a 12-digit loan number. Right? That's what goes in here. If you don't have it, go back and check with your lender. They could provide that for you. For those of you who are on the portals and you're filling out this application on the portals, many times that information is already pre-populated for you because it's tied into your account. The next one is your actual bank loan number, right, that they gave you. Next item, what was your total PPP loan amount? In this case, $80,000. And what was the disbursement date? In other words, what day did the funds hit your account? Again, that's when the clock starts ticking. From there, How many employees did you have at the time of application? Now, again, this was that frustrating part because they really didn't tell us and give us a lot of detail here. Right? When we were filling out those applications early on, there was no place that they defined a full-time equivalency. And so the guidelines that I've gotten from everybody I've talked to, and I've checked with quite a few, if you can have that number agree with what you had on your original application, you're better off. Right? If you can't, because we didn't properly calculate it, because they didn't give us any guidelines, then put the actual number. You're just going to have to write up something to indicate why it's different. Right? I misunderstood it before I calculated it this way. Now that you've given us guidelines, here's the actual calculations are contained in my backup documentation. So again, but if you can make it agree, that will make things flow a little bit smoother for you. Next, how many employees do you have at the time of the application being filled out here, the forgiveness application? Next item, the EIDL advance amount. So if you also as a company applied for and received the EIDL loan, that's EIDL is an economic injury disaster loan. If you applied for that, again, that loan also in many cases gave you up to $10,000 right up front as a grant. Well, the intent of that grant is to help you cover payroll and keep people going. They're not going to let you double dip. And so they are going to subtract that grant amount from your total loan amount to determine how much is forgiven. If you receive both, you're going to have to pay at least that amount back. So be aware of that piece of it. Again, it's not flat $10,000. It could be up to. That was geared on based on your total payroll and how many employees you had at the time. Along with that, your EIDL application number so they can tie it back to it. Payroll schedule. How do you pay your team? Is it weekly, bi-weekly, twice a month, monthly? You can put that information in. That also comes into play coming up here when we hit the alternate payroll covered period. So the next line then is the covered period. Now the covered period starts the same day you got your funds. So those two dates should be exactly the same, right? And then what's the end of your covered period? Now again, if you're sticking with the original 8-week period, that 56-day, that ending period will be 56 days from the start of your disbursement date. If you're using a 24-week period, then it's 168 days from the start of the disbursement period. So again, that's where you calculate your ending. Now, again, there's been a fair amount of questions that came in around this alternative payroll covered period. I can get this out, right? So for some of us, especially it tends to be larger companies that run it, have more of an issue with this, is let's say I receive my funds on April 20th, but my next payroll doesn't hit until the 26th. They would actually allow you for payroll purposes to declare the 26th as the start of my alternate payroll covered period. Because that means now the end of my payroll period is going to be either 56 or 168 days from the start of that payroll, right? So that would actually put the payroll, so the period of time that I'm actually going to track payroll going out to June 20th, if I'm using the 8-week period, as opposed to June 14th. Now, the way that this is written in here, and this is where some of the questions come up, is that the payroll expenses, or any of these expenses for that matter, have to be, the way it's written is they're either accrued or incurred during the covered period, right? So if I look at payroll, prime example of payroll, let's say payroll hit for you on the first day of your period, the same day that you got your funds, right? At that point, the work that was done for that payroll was accrued for the previous 2 weeks. But again, it was incurred, the expense was incurred on that first day, so it's allowed to be put in there. Or it can be also incurred, right? So let's say payroll hits 3 days after the end of your covered period. Well, that payroll was actually accrued during the covered period. You could use those funds as well, right? So when we look at that, at that point, if as long as you are paying out either weekly or bi-weekly, then you can simply take, payroll hit on April 20th, the same day I got the funds, I could use those funds. hit the payrolls as we go through it, and then we get to the very end of it, and we accrued but didn't pay at the very end of it, I could use those as well. That would be allowable. And you don't have to provide any additional or different documentation for that accrued. If your payroll is either twice a month or more, monthly or something other than that, then you're going to have to start providing documentation to show the accrued dollars within that time frame. So bottom line is, again, for most companies, if you use a standard period at that point as your payroll period, it just makes it cleaner, it's easier. Again, it's kind of right in that middle for most of us, especially since they went out to the 24-week period. Think about this. Again, it was literally 10 weeks worth of payroll that you got in your loan, and you have 24 weeks to pay it out. So for most of us, that simplifies that piece of the puzzle, and you won't have any problem with that. So hopefully I clarified that particular portion of it. So Ron is asking, we take a weekly paycheck, then we do a member draw. Do we put the regular check on the employee side? No. As the owner of the company, all of your wages should go on line 9 on page 3, right, on table 1. Worksheet A, rather. So all of the employee wages should go there. Nothing goes on table 1 or table 2. Employees at the time of forgiveness, is this number supposed to be the same as a full-time equivalent number or just the number of employees on the payroll? It should be just the number of payrolls at the time of the forgiveness application. Now, again, part of that, if you walk through that example, the full-time equivalency exceptions, you added in there. All right, remember, if you remember way back, we had 2 employees on table 1, so they were 2, and then we had 1 full-time equivalent exception that goes into that calculation as well. So ideally, it would end up being the same number or more at the end on that one. If I've not made that clear, reach out to me afterwards. Now, again, with this alternative payroll period, you have the option to choose between 8 weeks or 24 weeks. And again, you calculate them both and use the one that benefits you the most. For most of us, if we weren't able to use up the funds during the 8-week period, you're going to use the 24-week period at that point anyway. From that point then, the last section of the worksheet is really where all the final, right, that's the money section, if you will. That's where everything is going to start to happen. So first off, we're going to tally up, right, the payroll and non-payroll costs. So line 1. Right, we're simply going to go out to Schedule A, grab line 10, total payroll costs. Right, then we're going to go out and find the business mortgage interest payments. Now, this is business mortgage interest only, no prepayments, no principal payment. I'm going to come back to this one in just 1 second because there was a number of questions, again, around this particular area. Line 3, business rent or lease payments. I'll talk about that one, but the key here is that the lease needs to have been in place in writing. You have to have a legal contract in place as of February 15th. Right? And I had several questions come in that, hey, as the owner, we own the building and the business pays us rent for it. Is that allowable? Well, maybe. Right? So the question is this, is even though I own the building and I own the company and the company is paying, me rent, there needs to have been a written legal lease in place as of February 15th in order for you to be able to use that as a valid expense. Dealt with that one particular company, they didn't have that in place. As a result, that lease is not approved. Also, again, it's just for the flat-out lease amount. There's no extras or anything like that that would go in there on that piece of the puzzle. Again, only lease payments. Now, lease payments also covers other items such as copiers, servers, right? Trucks. If you have trucks on a lease, you can absolutely use that lease payment covered under here as long as they were under that lease and you have that written agreement as of February 15th. Anything after that date does not qualify. And then the last one is the business utility payments. So this is electricity, gas, water, transportation, telephone, internet access, cell phones. Right? In fact, if you have employees that they use their personal phone and you pay them and reimburse them back for the use of their personal phone, that's a valid utility expense that you can utilize. So let's look at a couple of these because, again, there was a lot of question around them. And again, back in April, they issued, again, clarifications on this point. And if you want to put yourself to sleep at night, go pull the Federal Register and read this for a while, right? Because this, I found this on page, I think it was like 27,342, literally, of the 2020 regulations, right? And it's tiny, tiny print. So a lot here. I wanted to give it to you in verbatim, but again, I'm going to highlight a couple of points. What is allowed? Mortgage, interest payments, right? But not principal payment, right? And this is on any business loans, not personal. So the loan has to be in the company's name. Interest on your mortgage for say, a building that you purchased, right? So that would be your mortgage that's there. Or equipment that you purchased, right? So if you have loans on your trucks, the interest from those loans on the trucks would qualify. Now, for those of you who got a zero interest loan on your truck, there's no interest on that. The entire monthly payment is principal, and so none of that qualifies. It's only the interest portion. Sorry about that. A couple of the other items in here, again, business rent payments, right? But again, it has to be under contract as of the 15th. Business utility payments, for example, the cost of electricity in your building or that you rent, or gas for driving your vehicles, right? So fuel would be a valid expense under this. Now, again, a lot of stuff there. If you go out to the resource page that we gave you, the Untangle page, I've got the actual copy of the register for this, and I did you a favor and highlighted these particular areas so you don't have to read through the minutia to try and find it. So again, any interest on any other debt is not eligible, right? So a personal loan, an unsecured loan, it's only on things that are actually tied to hard property. Then we come again to the full-time equivalency, right? So again, we keep coming back to that piece of it, the head count that's here. So simply go back to Schedule A, get line 3, right, fill that one in, right? It's the total wages for the employees, right? And then again, what you're going to do is add the amounts of lines 1, 2, 3, 4 above and subtract line 5 from it. In effect, what you're doing is you're subtracting wage reductions from the payroll expenses, is really what's happening there. Line 7, simply go out and get your full-time equivalent quotient that you calculated earlier, or if you use the spreadsheet, you can pull it off of there. It's Schedule A, line 13. And then we come into lines 8, 9, and 10, and that's the money line, right? Because 8, 9, and 10 are basically, we come up here and say, what you're going to do is you're going to calculate one of 3 different ways, and you're going to take the lowest of the 3, and that's going to be your forgiven amount, right? So the first one is basically multiply line 6 by line 7 above, right? And so you'll do that one. Line 9, what was the original loan amount? And line 10 is simply what were your total payroll costs divided by 0.6. We're just making sure that your payroll went for at least 60% of the funds that your funds were used for at least 60% payroll. And so then you look at those 3 numbers, whatever the lowest one was, that ends up being your actual forgiven amount. Okay, so that one comes up there, and that's the end of the calculation. Now, a few more questions that came in. Again, we spent a lot of time on that one, and I'm looking at the clock here going, holy mackerel. But here's the thing. We just answered a whole bunch of questions that apply to the next 2 applications. So those become very simple after this. A few of the other questions is, do I have to rehire the same employees, or is it just a head count? Right? So you laid a few people off, or you got rid of some. It's just a head count. All right? So as long as you have the same number of people that you had before, then you're in good shape. Right, so that one is easy enough. Again, that spreadsheet that we talked about will help you calculate that piece and make that easier for you. The other question is, when should I apply for forgiveness? Now, technically, and there's a lot of lenders out there that say, first off, the general guideline is at the end of your covered period, right? So there's a lot of lenders. Anybody who was on an 8-week covered period, you're already past that. You can go ahead and apply. If you're on the 24-week, there are a number of companies that are still in their covered period at this point in time. And so technically they say you need to wait till the end of your covered period. There are some lenders, ours being one of them, that said if you've used all your funds already, even though you're not at the end of your 24 weeks, you can go ahead and apply for forgiveness. But keep in mind that on the final signature page, when you're initialing all those items, one of the items that you're agreeing to is these numbers here are indeed correct. And so for the entire period of the covered period, or the time frame of the covered period, these numbers are accurate. In other words, you're basically saying that, I've got 10 full-time equivalent employees, and they're going to be here through the end of the covered period. Right? And so if you're not quite sure about that, then wait till the end of the covered period before you go ahead and submit that. In our case, they say, if you're sure things aren't going to change, go ahead and submit it at that point. So, but in most cases, wait till the end. I ran payroll the day before the funds were deposited. Can I include this? No. Your clock starts the day the funds hit your account. Nothing prior to that is allowed. Had another company, and this one actually came in earlier on, but it was a similar question, is we have a lease on our building, and we had prepaid it through July. In other words, they paid up in advance. Could they just go ahead and make monthly lease payments and stay ahead and count that? Again, it does not allow for prepayments, and so it's for the funds. The expense has to hit for the fund that was the month it was intended to cover, so that would not be permitted. So hopefully that one, we got through that one. These next two, and I'm at 25 minutes after the hour, so I'm watching my time, but these next two are fairly easy, right? So the 3508EZ is the second application, right? So this one can be used if you meet any one of these criteria. Number one, that the borrower is self-employed and has no employees. If that's you, you can use the easy form. Number two, the borrower did not reduce the salaries or wages of their employees. So in other words, I have employees, but I didn't reduce their wages by more than 25% and did not reduce their hours. If that's you, you can use this form. Or the third criteria is you did not reduce the salaries or wages of your employees by more than 25%, and you experience reductions in business activity as a result of directives related to COVID-19. And so again, this one typically goes back to some of those areas, restaurants, salons, things like that, where they were forced to shut down. We still kept paying our people, but we had no hours. At that point, you can use the easy form as well. So when you look at this one, the whole top half of it is identical to the other one. There's no changes. It's exactly the same. The next one, and so this is really the meat of that application. So it's much simpler, right? And so first item here, if your loan amount was more than $2 million, check there, you're going to be audited. Next item, line one, what were your total payroll costs? We fill that one in. Line two, what was your business mortgage interest payments? We covered that, right? We'll put that one in. Line three, what about business rent or lease payments? We'll put that one in. Line four, your utilities, exactly as we described them for the other application. So we're simply going to list those in here. Then we get down to, again, that forgiveness area. Same thing, you're going to calculate it three different ways, and it's the lower of the three, right? So add together lines 1, 2, and 3, and 4. That would be the first method. Second one is what was the total loan amount. And the third option is your payroll costs, again, divided by 0.6 to make sure that at least 60% of the funds were used for payroll. And then you'll look at those three numbers, and it is the lower of the three that is your forgiven amount. All right, so that one is fairly simple. It's fairly easy. Now, with both the 3508 and the 3508EZ, what do I need for supporting documentation? And basically, you're going to need, there's a lot of it, right? So you need all of your payroll documents verifying the eligible payments. So verifying all those payments that you put in the application, you need to have a payroll report showing that information. So again, all of that documentation. Your IRS, your 941 filings showing that you actually paid the withholding, the company portion of your withholding. All the receipts and canceled checks for any of the benefits, so retirement benefits, right? You have to show the canceled check where you as the company made that payment to the investment company. Need to have that. Again, all the payroll reports showing the full-time equivalency for the reference period, right? So if you picked last year as your reference period, right? How many full-time equivalent did I have at that point? I would have to pull up the payroll reports for that period last year. Now, you should have that information because you supplied it when you actually got applied for the loan to begin with. It's essentially the same report or same detail that you provided back then. In addition to that, you also need either the paid receipts or the canceled checks for any mortgage interest, for any lease or rent payments signed prior to February 15th, and the receipts and canceled checks for any utility payments. All right, so they're going to need all that information, stack them all together. Even the online portals, you'll just go ahead and upload that information. All right, so now that brings us to the one they issued and came out with last week. So whereas the full application is 5 pages, the easy application is 2 pages. That is the entire simplified application, the 6508S. Now, in this one, or 3508S rather. So in here, here's the thing. Number one, there's fewer calculations. There's less documentation. People who qualify to use this application are exempt from the reductions for full-time equivalency and wage reductions. Right, so you get away from that piece of it. You don't have to show your calculations for the forgiveness amount, but you need to hang on to them. Because again, they can come back and ask you for those down further on if you need it. So again, like I said, that's the entire application. Really what you're filling in is right there. They have really simplified this one dramatically. So if we look at that top area, the first part of it, exactly the same as the other two. What's your company information? So that portion of it is fairly simple. Underneath this, again, same 12-digit SBA loan number, your bank's loan number, what was your original PPP loan amount? So these are pretty much the same, right? What was the date you got your funds? How many employees at the time of the application? Now, let me back up, right? So we hit this one. There's a couple of things on here to at least be aware of. Number one, you notice the expiration date on this application is still October 31st, even though they issued it October 8th. Right, it's the same date that came out on the very first applications way back in spring. They just never corrected it. Second thing is, these 2 lines have been creating a little bit of confusion. If you look at it, the first line says, a borrower may use this form only if the borrower received a PPP loan of $50,000 or less. That's the major caveat. Okay, now if you look at the second line, it says a borrower that, together with their affiliates, received PPP loans totaling $2 million or more cannot use this form. I don't know about you, but the last time I went to school, $2 million was more than $50,000. So again, that tells me that that's just stuff left over from a previous application that they edited and they didn't check it out quickly enough. But again, by virtue of the fact that it's PPP loans less than $50,000, we know this is going to be a smaller company. Okay, so number of employees at the time of application, 2, right? How many did we have at the time of forgiveness application? 2, right? Again, if you have an EIDL loan, what was the amount and what was the loan application number? You're going to have to put that in. Again, typically companies that have that lower dollar amount did not apply for EIDL loans as well. And then the last item on there is what's the forgiveness amount? Right? And hopefully it'll be the same as the other one. You don't have to show your calculations. You don't have to walk through that whole thing with the full-time equivalency. You don't have to worry about wages being lowered more than 25%. None of that stuff qualifies. They're figuring that basically if your loan was less than $50,000, you're a small company and you needed the funds. All right? Now, again, just keep in mind, I don't have to show my calculations, but you need to have them and hang on to them. Right? Because if they come back and ask you, you're going to have to develop those and how you came up with that number. Now, the supporting document for this, the big difference, right? So that whole list I gave you before still applies. The one big difference is, again, those payroll reports showing the full-time equivalency for the reference period, you don't need any of that. You don't need the calculations showing your full-time equivalency or the wage reductions. That stuff goes away. But you still need payroll documentation verifying eligible payments, the payroll reports, the withholding, all the rest of that stuff. Now, I did run into a company, worked with a company earlier this week that small company, one man, they basically use the same debit card for business expenses and personal expenses. And what they do is at the end of the month, they download the bank account from the statement from the bank. Anything that's a business expense, they put in the proper general ledger account in QuickBooks. And anything that was a personal expense, they put into a personal GL account. And that's the way the guy pays himself. Here's the problem with that. The SBA is not going to accept a report showing that you went to the Ace Hardware to buy some stuff for yourself as a valid method of payment for wages. All right? You're going to have to work with your accountant at that point to get your books clean, so whether it's a journal entry or whatever it is, to show that these were wages coming to me. In that particular case, this was an LLC. It wasn't a sole proprietorship. right? So it would have been a little bit better in that particular case, but an LLC, you don't want to commingle those funds at that point in time, and so you're going to have to show where the wages are that came out of the company. I know that there was just a couple. So, Tanya, I know you asked, should we ask our lender if they prefer the 3508 or the 3508EZ? They will take both of them. There's no question on that point. In fact, in most of them, especially if you're using the online portals, you're probably going to ask, they're going to ask you a couple of questions, and that will determine which one you will ultimately use at that point in time. A couple of the other questions is, but pertaining to that, if you do qualify for the 3508S, the simplified form, most every banker had their online portals already in place several weeks ago. And you could actually start applying for forgiveness in their portal. This other S application came out last week. I don't know of any bank at this point whose online portals have been updated to reflect this one. In fact, I checked in with my lender because, of course, our portal doesn't have that. I work with a couple of companies who got their funds through the same institution, and he said, yes, they can go ahead and use it, but you're going to have to send that one to me manually, and I'll hand walk it through. If you're dealing with a Bank of America, with Fifth Third, if you're dealing with Wells Fargo, in those cases, a lot of them are saying, if you want to use the S form, just hang tight for a while. We need to update our system because they won't accept paper forms at that point in time. So keep that one in mind. Is the new application only for companies that receive loans of $50,000 or yes? Yes. Allison, it's purely $50,000 or less. Will our bank determine if they want documentation, want the documentation of expenses for the full 3508? The answer to the question is yes, and most likely they are going to want them. And the reason being is because even though the SBA is paying off your loan, the bank is still responsible for validating the information that's being submitted to the SBA. And so for liability reasons, the bank wants to make sure that their number, what they're saying is valid, is indeed valid. And so your bank is going to dictate that, and it's going to be the same thing we saw back on the application of the PPP loan process. Some of them required a lot more information than others. It was just purely a matter of what they felt comfortable with because they were the ones who were validating this information. We use PEO for our company. What will be required to supply for our forgiveness application from the PEO? Becky, forgive me. It's not ringing a bell. What is PEO? If you want to throw that one in there, I can answer that one here as well. Now, a couple of other things. Again, I've referred to a few of these tools a number of times. Again, if you go to our website at grandyassociates.com, again, right up here in the corner, we've got a link to the Untangle page. When you get out there, there's a number of other resources in addition to this. All right, so one of the things that is absolutely imperative, even at this point in time, is you need to micromanage your cash flow. There's no question. There's a lot of trades companies who are actually growing, and they're doing better at this point in time. There's others who are struggling. And so you need to micromanage your cash flow. And so we put together, and many of you guys, we've had hundreds of downloads on this spreadsheet. It's just a cash flow projector. It will let you project your cash flow forward 16 weeks. And let me tell you, if you want to get a better feel for where your business is, start projecting your cash flow out a couple of months. It's an interesting proposition. If you're not quite sure, how to use that, you're not good at Excel, I put together a quick 8-minute video which walks you through how to actually use that calculator as well. We also have, again, there's a resource, a quick, about a 50-minute video that we put together. What are things that you should be doing within your company just to deal with this entire COVID issue? If you haven't already put them in place, these are things that you need to have in place. Right? And it's not, we're not talking necessarily about getting the right PPP and all that stuff. That's been talked to death. What are things that you need to be doing to get the message to your customer, and what is that message that you're delivering? Along with that, on the dollar side, if you really need to figure out where you're at, take a look at our Planning for Profit workshop. We are now, as a result of COVID, we are doing that program monthly online at this point in time through the same format, and it's been working very, very well. And then last, if you scroll down a little bit farther on that page, we've got a couple of other. One is a spreadsheet just to help you track your expenses in it. And then here's those two forgiveness calculators, either the 8-week or the 24-week calculator. Click on whichever icon that you want, you can go ahead and download that. There's no cost to anything on this page that you can download from the page itself. So by all means, use that for information. So just kind of looking over some of the questions, it's a lot of stuff that we covered. There was a whole bunch of questions that we had inside of there, and wanted to cover all those questions were things that we had come up into us here in the last couple of days. Again, they've just been coming in fast and furious. Just trying to see if I missed any questions here real quick. Where can you find the spreadsheet under Untangle? Again, just scroll down. That is, again, when you get down, you'll see this right here. And it's the 8-week or the 24-week, because, again, the formulas are a little bit different depending on the period that you're working with. Download whichever one that you actually want. If you're a sole proprietorship, do you fill payroll costs with your pay? Do you fill payroll? No. Payroll costs are not, I don't believe that those are covered. It's just your actual payroll itself, the dollars that you're taking out, that would be an allowable expense. New application, is bank going to return? Okay, got it. So I think I got most of those. If I missed your question, forgive me. Stacy is going to go ahead and put my contact information up here on the screen. By all means, feel free to reach out to us at the phone number 877-202-8891 or email me at bill@grandyassociates.com. That will come through to my mailbox, and I can certainly help you out with those as well. So we're pretty much wrapped up at this point in time. I see 2 more questions that just popped in here. Nope, we got them all. Okay, so with that, again, this is a challenge. This year continues to be a challenge. The only thing that's constant is change this year. There's no doubt about it. And so with that, again, if we can help you in any way, please reach out to us. The more companies like yours that weather this storm in a good way, the better off our entire industry will be. So it's our desire to help you, to walk with you through that process if we can do that. With that, God bless you. Bless your family. Stay healthy. Take care.